What?
Sometimes we have really good shows. Sometimes we have great shows. And then shows like today, we have fantastic shows. Get your pencil and paper out for this pre-market prep. We got a lot to cover. Get ready for some earnings. Get ready to talk retail card lines with Seth Basham from Wedbush Securities. It's midweek, pre-market prep. Let's get going.
Welcome to Benzinga's Premarket Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, we're going to do this quick rundown here. Range-bound S&Ps down 14.75 handle, 58.77.50. We'll talk about that tight range here in just a few minutes. The buck, pause and go, up 35 cents, 104.25. TLT, what's it trying to tell you? Down 33 cents, 91.99. Crude just hovering above 70, down $1.36 at 70.40. Gold headed for 2,800, up 410, 27.64. My silver, that's playing catch up, even though it's down 36 cents, 34.67. And Bitcoin giving a little back here after the double top last two sessions, down 1,055. It's 66,440. Triple D is going to bring the energy right now to this show. Let's go, Dennis. Let's fire up. Where is Dennis? No, he's not. Where is Dennis?
I don't know where Dennis is, but I'm here.
What happened to Dennis? Oh, no. He must have got caught in traffic. You can add a... Dennis, I just said you were going to bring the energy.
And then I'm not even here.
Yeah.
How the heck did that happen?
You get
I
caught
lost
in
a minute.
traffic?
I'm always by the minute. My schedule's like minute. Somehow in the last 5 minutes, I lost 1 minute to be 1 minute late on this show. I've never been late before. Yeah, well, first time for everything.
All right, we got so
my apologies.
Much to cover.
My apologies.
So much to cover that we are going to be so disciplined. We are going to do only one or two tangents each, and AB is going to stare. Let's go, AB.
All right, well, let's start with some price action from yesterday. A couple of stocks that we actually talked about on the show yesterday. So let's talk about 3M and GM real quick. We'll start with GM here. So if you guys remember, General Motors yesterday morning reported earnings. We said the earnings were pretty good. I mean, they beat on EPS and sales. But the stock was trading lower in pre-market trading, and we were like, oh, I mean, GM did this last time. They reported good earnings. The stock went up, and then it got crushed. It ended up going down on the day. Yesterday, it started off in the red. People ended up buying the dip on it. So yesterday it was trading. We got up to around $53.50 yesterday. Closed up $4.80. So ended up closing up 10% after again trading red in the pre-market session yesterday. So a pretty wicked reversal yesterday in GM.
It's a nice pop. We talked about this when it pulled red. I was like, the earnings were good, but typically what GM does is pop and drop on the earnings. Well, they pulled the rug out. And this has been an earnings season where you have seen wicked reversals on both sides, where some stocks, they pop and they drop and they pop again. It's been a wild earnings season, but GM obviously reported it was good numbers. We talked about the show and being good numbers, but then the stock obviously gave all those gains back. It was up at 52, went down to 49, the pre-market, actually in the 48 handle, I think, in the pre-market. And then they didn't have any of them in the regular session. They just started buying it hand over fist and couldn't stop buying it. Similar to what the banks did, actually. The banks, remember, Joel, on their day, a couple of them popped, then gave it back like they typically do, and then they popped them again. So reversals all over the place.
Yeah, a couple things to say here. Do you think this is a Trump stock or not?
General Motors?
Yeah, because remember what he said about Detroit when did you heard what he said when he came to Detroit?
What did he say?
He said that if he didn't win, the rest of the country was going to end up bleak like Detroit. That's what he said. That's what he said to the Detroit Economic Council.
Yeah.
But anyways, big old move. Is this a breakout or a fake out? And we're just going to have to wait just for a couple days here because this hasn't been over 50 since early 2022. So it's got to establish a bid here. It has to look like UAL. UAL kept on going, right? And now it's consolidating. It had the big update, that UAL, man, I put the warning out on here, but it's really important for GM. I know it's down 8 cents. It's just got to say, hey, we're going to establish a bid here above the breakout level, and we're going to keep on going. So keep an eye on yesterday's high. Keep an eye on the mark. I think that's really important for GM here. So looking good for the Motor City. I'm glad to see that. And I told you, Dana's been working there about a year, and you can see what the stock has done over the past year. So very happy for that stock. Ford got a little bit of a lift off this. Nothing
Not
major.
much. Not much.
It didn't.
Not much.
Yeah.
And then we get Tesla tonight. So that's going to be interesting too. So let's just stop and just take this whole earnings season, because my job as a trader, and I'll tell you right now, if you can do it and get into pattern recognition, and we're not talking about pretty charts, we're talking about when you see a theme happening early developing. The theme of this earnings season has been like contrarian style, where you're getting initial pops and then drops, you're getting fades, but you're also getting a lot of weakness on a lot of good reports. GM may be the exception to this rule, but if we just look, at a lot of the reports, even from the last couple of days, I mean, General Electric report wasn't that bad. Bang, the stock just crushed. You had yesterday, Polaris report wasn't good, stock crushed. Lockheed Martin, I didn't think the report was that bad, stock crushed. NUE, stock crushed. ENPH here overnight, which we can talk about this earnings in a second. We knew solar's just in shambles here right now, but stock crushed. SHW, stock crushed. GPC yesterday, Genuine Parts, nobody talked about this one. It was down 30 points on $140 stock. Stock crushed. They are absolutely, if you say anything bad, and in some cases you don't even have to say anything bad, they are crushing you. So there's a play here. And I was talking to some traders over at Bright Trading. They were just saying, you know what, the play this earnings season, just short every stock in the earnings. Not saying, not everybody has the capabilities to do that. But the stocks that are popping, GM, you're going to lose on. But there's so many more that are really getting hit hard. And then you get the VRTs of the world, which we could talk about. Vertiv, stock that's run up into earnings, VRT, and raises full forecast, beats by 7 cents, and the stock goes down as well. I mean, this earnings season is very, very, very unforgiving on the long side here. So it's definitely not the earnings season to be blindly buying calls into these things. It's been actually the earnings season to be buying puts, or alternatively to, be not playing or fading moves too, because we've seen the fade. So it's been a little bit of a quietly vicious earnings season.
To your point, Dennis, we are seeing kind of reversals across the board. We talked about GM's reversal. We had another one yesterday, 3M, which reported, we were talking about it in the pre-market yesterday. The stock got up to around 143 after reporting earnings. Again, those numbers were pretty strong for 3M as well. And, it wasn't surprising to see the stock up green in the morning, but then reversal to the downside. So the exact opposite of GM. 3M was green all pre-market and then went red in the regular session, got down to around $130, ended up closing down 2.3%. So about $3, trading down slightly again this morning. We're at 131.62 here. So some wicked reversals. And again, GM and 3M yesterday, two stocks that we talked about in the pre-market on yesterday's show.
So here's another case, though, not even about the wicked reversals, but here's a case. Let's just say hypothetically you shorted all those stocks and 3M you're losing on. Well, that one came back even. Not saying GM would be the one that you would lose on with that short them all strategy. But I mean, 3M pops and then gives that back too. So even in that case, and maybe go back to the VRT here, Joel, because it did give the earnings here this morning, and the earnings were good, and they raised guidance, and this stock did pop on the initial earnings report. But again, high bar. This is, the AI stock that everybody's been talking about. Got up to, I think, 116 on this report, which would have been up $3. And quickly, those algos, the blind, stupid algos, and they are. There's a lot of these earnings algos that are flat out stupid. So if you think you can't beat the algos, you can, folks. They just blindly buy when it's going up. I mean, go to Boeing. Here's how stupid the algos are. Here's how stupid they are. So Boeing comes out, they miss. The stock goes down $3. And I'm like, they already reported algos. They already reported, but they're too stupid because you're programmed in to just see the mess. I honestly was thinking about just having a bid sitting down there because I kind of anticipate that could happen. I would have been sitting lower, though, and I wasn't awake. What time did that come out? It was a little bit earlier than I woke up. I slept in today. I'm wound up, though, but I slept in. Watched the late Oiler game.
You weren't up by 7:30 to 7:45, Dennis?
Was it 7:30 it came out?
Yeah, it was it made the low.
I wasn't paying attention. I was at
Where
my desk.
were you?
I just wasn't paying attention. I wasn't paying attention.
You better start setting your alarm.
My kid's sick. I know I'm late today.
Oh, okay. The old kid's sick.
Okay, I wasn't at the desk, but I was already logged in. I was just bouncing around.
Kid sick is like, that's a get out of free jail card. Okay.
But in any regard, we're just saying, I'm trying to give you guys, ideas and trading strategies. Like, we're a news show here. Benzinga Premarket Prep. We're a news show, but we're also a strategies show, and we try to talk different strategies and different ideas. And what I, again, specialize pattern recognition. But the algos are just flat out stupid. They see, oh, miss, sell. Oops. Oh, what do you mean? And then somebody, probably the human behind it's like, oh my gosh, I forgot to pull Boeing. Got to get that out of there right now, because I ran algorithmic software for years. When you forget to pull something, it really sucks. So it's predictable that there's probably a few that are programmed to see miss, hit the stock, and they're like, oh crap, Boeing missed by 11 cents, but we already knew that. Phil LeBeau gets on CNBC, we already knew that. So I mean, it is down 88 cents here. It's down a little bit, but and point being is that it wasn't going to get crushed $10 on this report because we already knew the numbers.
All right, real quick. I just want to give a couple technical lessons here. For first, I was looking at the VRT, and man, that pop. I mean, if you're looking at this stuff after hour, was it after? No, it was this morning. This thing, like, if you were looking for a potential place to sell here, let's say you had a long and you're like, well, it closed at 104.25, or where did it close yesterday? Oh, it closed at 112.47 yesterday. Boy, I would sure like to sell the all-time high, right? So you go to your trusty daily chart. 116.19 is the all-time high. It goes to 116.50 and then reverses. So, just trying to use your daily levels. I'm trying to teach you here, using your daily levels during the pre-market after hours action. The other thing with Triple M is not so much of a level, but we try and talk to you guys about the importance of the opening print and where there's big money trading hands on the opening print. So if you were like, oh man, 3M's going up $20 today. This is the greatest stock. They make tape. So it opens yesterday, at 136, and it has just a crazy run up, right? It goes all the way to 141.24. Okay, you have a chance to make some money, right, on the long side. But look what happens when it came back down through that open. Look what happens when it came back down through 136. Yeah. It didn't even blink.
No.
It didn't even blink. So just a couple things. I mean, they're tricky. Looking at it, from today is a lot easier, after you see the chart. But just wanted to emphasize that. Why are we so weak this morning, Dennis? Man, we had that rally at the end.
We're not even weak. Look how many stocks are absolutely hammered here this morning, and we're barely down. I think we're strong. This S&P is so insulated, man. This hasn't been a good tape for a lot of stocks. Has not been a good tape for a lot of stocks. And yet the S&Ps say, no, we're all insulated. We're all hedged up, so we don't even move. The S&P has got to be the most resilient investment vehicle of all time now. It just doesn't go down. It doesn't even matter. We've got NVIDIA up. It's all good. NVIDIA's down $1. It's all good. But there's other stories here too. I mean, but to your point, Joel, there's multiple lessons. I don't want to move away. Like when I get on a theme and we're talking like 10 earnings stocks here, so we're covering them all. I mean, you're making a good point here too. If you've already, and we're giving you the pattern, what has been working. But if you've discovered a pattern and you're saying, well, they're hitting earnings stocks, but 3M's up 5 and it's going to go up 10. This is not the market environment for that. It's not the market environment to chase a stock up 5, 6, 7 points on earnings. Some of them will continue to go. Philip Morris, crazy yesterday, continued to go. Also a defensive stock. But you've got a lot of other stocks. Nothing's going to work 100% of the time. But if it's 60% of the time, 55% of the time, 51% of the time, you can make money with that. It's not the environment to chase, though. That's the bottom line. It's not the environment to be chasing 3M on a decent report. Probably not the environment to be chasing GM, although it worked yesterday. The report was really good. It's down a little bit today. I mean, does it leak it back? The banks leaked it back. It could leak it back. I'm not buying GM up 10%.
All right, so some other major news that we have not covered yet. McDonald's. This hit the tape yesterday right after the close that McDonald's is dealing with an E. coli outbreak in multiple states, across 10 states. There has been one fatality in Colorado, so this was linked to, I think they were saying the quarter pounder patties. And so McDonald's has pulled the quarter pounders off the menu in certain states. As soon as this news hit the tape, I went and checked the stock. It was down 10%, which is about about $25 billion worth of market cap was being wiped off of McDonald's on this news. At the time, I was like, this seems like kind of an overreaction, and the stock did end up getting bought back. So it got as low as, around 285, it looks like, or a little bit below 280, a little bit below 285, and then got bought all the way back up to almost 300, 296.50, and then came back down a little bit. So either way, we're off the lows from when that news hit the tape yesterday, but still trading down more than $21 this morning, around 7% on McDonald's.
I was all over this too. It actually was interesting because Starbucks reported earnings, SBUX, and they did preliminary numbers, and the stock got absolutely hammered there too. Starbucks traded under $90 on the number. Started popping back. And then it's like, so you had all these reports that were supposed to report, but then you had this random Starbucks news. It's like, holy crap, it's just out of nowhere. So I'm going to Starbucks and just trading it a little bit. And then bang, McDonald's down 25 in like a split second. I was like, what the hell just happened? Did they announce guidance? Did they do preliminary numbers too? And then I see the headline. I'm like, holy shenanigans. Obviously, when we see E. coli, the algos hit first, ask questions later. And it was down so fast. You don't realize how quick those algos are. And some of them made some money. So not all the algos are dumb. The algos there were pretty damn smart because they hit every single bid, 313, 312, 311, 310, 300. Just killed it. So they made a lot of money. So as much money as they lose, maybe chasing on some of these, the algos made a lot of money on that. That E. coli algo is a no-brainer. You see a stock, CDC come out and say McDonald's linked to E. coli, sell immediately, and that's what happened. Now, again, did they overshoot? Absolutely. Was it an overshoot probably down to 282? Probably. I mean, stock's down up at 293. Is the story over, or do we get more cases and then it starts to get whacked again? I mean, coming in here on day one is always a dicey thing, and it was the dicey onions that actually caused this to happen. So they're saying it wasn't the meat, because when they originally hit this, and there was so many repercussions to think about, Tyson Foods, because they're a food supplier, they started getting smacked hard too. But then they said it was the onions. And when they said it was the onions, then Tyson started bouncing back. They had Beyond Meat, Joel. Beyond Meat had this huge rally on this because, oh my gosh, you're never going to eat meat at McDonald's again. They're all going to have to go to the Beyond Meat burgers. And it popped it over to $7.20. Beyond Meat was up like 15% on this headline. And then they said it was the onions. And they're like, oh my gosh, sell Beyond Meat. They're going to still eat the patties. They can't eat the onions. Sell, whatever, sell. And they're hitting Beyond Meat. And then they're like, well, they're not going to eat at McDonald's. They're going to eat at Wendy's. And Wendy's starts popping off. And I was all over that one because I bought Wendy's flat at 19 and was able to flip it out just after that one. Other food stocks were popping. QSR is up here this morning. DRI was popping. There was all kinds of different food stocks popping because if they're not going to eat at McDonald's, they got to eat somewhere. buy the other ones. But who's got those onions? That's what I want to know.
Wow. That might be one of your top 5 rants of all time.
That's how it went
You
down.
just went from McDonald's
We cover
to
stocks quickly
Wendy's to Beyond Meat, QSR. What else did he bring in there?
So many stocks. I have them all.
Oh my God!
Lamb Weston. I didn't
who's
mention
the
Lamb
onion
Weston.
supplier?
Food supplier.
Did you hit ONON, Dennis? Did you hit that stock? Yeah.
Why do we want to hit? Because onions. Because the algos will screw up and think that's an onion stock.
Yes. All right.
That would be fun.
Real quick here. Wow, a lot of comments on this. I don't think they're going to be nearly as good as Dennis's. Look where this thing got to. This thing had a gap up day, probably earnings, and it had a big old gap between 79.50 and 81.72. Didn't quite get to the low that day, but it got to 282.22. 282.22. So, man, I mean, you just went back.
This incredible run, Joel, from 260 to 320. This incredible comeback story in McDonald's. It came back half of it in like 10 minutes. It took 3 months to go up in 10 minutes because of, a bunch of dicey onions. The stock gives back half of it. That was definitely, to AB's point, probably an overshot it. Now, again, if we start hearing, and we remember we have precedents here on the Chipotle, they couldn't
yes, we do.
Stopped. They couldn't get it stopped, and it started popping up over here and started popping up over there. If we get, expanded area, let's say to another part of the country or something like that, the stock is going to get hit. So as long as they keep it contained, we might have a couple more cases, that's going to be okay. As long as it's contained into that little geographical area. But if it starts spreading across the country, like we start seeing about, in Detroit, oh my gosh, there's the dicey onions and E. coli case in Detroit from McDonald's. I mean, then McDonald's would have problems. But they're not just me, I'll shrug it off. I don't think the stock's just coming right back, but it definitely overshot at 282, at least for the information we currently have.
All right. I mean, if you want precedence in this, okay, this was their thing started. Wow, it started before I'm looking. Wow. It's 5/14 in December, so of 15. So I don't know when it had to start before December. So I don't know when the first official outbreak was here back in 2015. But this stock got absolutely hammered. So I would look at this. I mean,
down like
I remember
75% from top to bottom.
For this Mickey D's, I mean, it's a nice pop. I mean, it came all the way down to this gap, this 282 area, which is unbelievable. So, I mean, that's important. You bounce 10, 12 bucks on this. I think the street's I don't think you're going to be finding a lot of buyers on this and any pops. I think, people are going to be like, okay, it happened once. I don't know if this happens again. I'm still sitting on a lot of profits. I bought this at top 250 in July. It's still near 300. I'm not sitting through this. So, and then also, I know some of the other restaurant stocks popped on this, but I think if you own restaurant stocks, man, oh man, I mean, it's just who knows how often, it's going to happen.
Well, what if those onions showed up at another restaurant too? I mean, I don't know who the onion supplier is. I actually tried to Google last night and they said they have multiple suppliers for their vegetables. Sometimes the restaurants even have local suppliers for their vegetables. So that's a bit of an issue, but I was like, oh my gosh, what if Wendy, who has diced onions on the things, like on the burgers, almost all of them. So lots to think about here, lots of repercussions. I agree with Joel. I don't think it's coming right back. And I think if you're coming here and saying, well, it's going to bounce, it already kind of did. It had a 12-point bounce from the lows. So now it's like, okay, there's news here. We're still digesting, kind of a pun, digesting the information here. So I think it's like sit on hands and get more information and make sure this doesn't show up somewhere else. Because this could be a headline stock all of a sudden. We see more cases and be like, algos will hit it. So maybe they give you, it's just a localized case, then there'll be a buying opportunity. But this is going to be a continuous headline stock at this point in time. And I don't think it's going right back to 314. Could it get up to 300? I think you find sellers up at 300.
Yeah, little. And speaking of onions, I made my my famous pasta dish, meatless pasta dish, and I chopped up 4 red onions, really fine, then sautéed them a little bit before I put the paste in. It's called Ira's Mom Spaghetti, and the smell was so thick from the onions. The garage door was closed when Lisa pulled in the garage. She could smell the onions. That's my onion story for
Wait,
today.
is it
Nice.
Ira, my mom's ex-boyfriend?
I don't think no. Ira's my best friend from college, my good buddy, best man
Oh,
at my
okay.
wedding, and it's his mom's pasta.
I
It's
thought you were talking
fantastic.
about the one that went to, or the one that you guys knew from down in Florida.
No. That's a different
So
one.
someone in the chat made a good point, and I think you can look at the precedents from Chipotle in terms of how the restaurant itself deals with this breakout, and where we go from here. But in terms of price action, because if you go back 10 years ago when this thing happened with Chipotle was a growth stock that was, you kind of a newer restaurant chain at the time in this phase of opening new stores all the time, and got this outbreak. And that was a lot bigger of a deal, I would argue, for Chipotle at the time than McDonald's now. McDonald's is as established as an American brand as you can be. So even if this goes on for a month or two, I mean, I don't think you're looking at that much value lost over time for McDonald's. Whereas with Chipotle, I think there was a lot of investor speculation that was like, there are a lot of people out there that have never tried Chipotle who will now not go because they've heard of these outbreaks. And Chipotle had multiple outbreaks in a 5-year span, whereas this is the first, major outbreak from a McDonald's. So looking at the price action, I don't know how comparable those two things will be. Chipotle's outbreak, a few years ago, and McDonald's today.
It's a good point. Counterpoint though is Chipotle started the same way, where we had one outbreak, and me and Joel covered this. We were actually just started doing Premarket Prep, I believe, when this happened. I can pretty much vividly remember it. They had the same thing where it was down like 10%, and it got hit because of C. coli, and they thought it was going to one-time deal. And then another case popped up, and then another case popped up, and then it went on for a year, and that's where the thing really got crushed. So if McDonald's took that same path, it's probably not losing 70% of its value. To AB's point, it is McDonald's. But if it comes out with more cases, and if they can't seem to get it beat, the stock will get hit. So I think it's a case-by-case basis, where meaning, is there going to be more cases or is it contained? Because if this is a one and done, the stock will probably be back at 315 in like 3 months. But we don't know at this point in time if it's a one and done. So I think more information is required. Is this contained? Is there going to be more cases? Is it localized? Those are the questions you want to be asking yourself. If you see a case pop up, and where were all these cases, AB? Do you have where they all were?
Colorado was, I think, where the death was, and then so the surrounding states, are all affected. So kind of those like western states over there. I saw even going as far, you had Colorado, Kansas, it was even in Missouri, they said. So kind of like any state surrounding Colorado.
Okay, so it's localized to a certain extent, in those few states right there. What you don't want to see is a case pop up in Florida, a case pop up in New York, a case pop up in Boston. If that happens, the stock gets hammered. So that's what you want to see, is the localized. You get another case pop up in Colorado, stock will be okay. You get a case popping up in another country, or you get a case popping up in another side of the USA, the stock will get hit. So that's what you're looking for.
But what if the market has already priced in this spreading a little bit more? Like, what if?
I think it has. I think it's priced in a localized spreading. Again, we never know exactly what the market is priced in, but we have precedence here, and we have common sense here. I think the market is thinking, okay, it's the Colorado. This is a little issue over here. We don't like the fact. But if we see it pop up further, I will say this. I don't believe the market has priced in like a spread outside of that region. So as long as it stays within that region, MCD is probably a buy. If it comes outside that region, Katie bar the door, they will hit the stock.
That's all right. One more thing, and then we're gonna move on from this. 2 very important points that I want everyone to take note of. This started in early August 2015. The public health Seattle King County investigated an outbreak of E. coli illness that made 5 patrons sick. 3 were hospitalized. This is August, folks. This is August on the chart when this started happening. Okay.
Stock wasn't down at all.
Right? Started to pick up momentum. And then another thing, and this will be the thing that determines whether or not Mickey D's can recover. They ended up closing 43 stores because of this. Temporary closed 43 restaurants in Seattle and Portland. So if they start shutting things down, then just get the hell out of the way. So there you go. You have the precedence of what it did when it first started. And if you're closing restaurants, man, you're losing money. I mean, I don't know what the volume, the average McDonald's
As soon as you start seeing more cases pop up, it's not just about closing restaurants, it's that people are scared to eat there. So you don't want people to get scared to eat there. There's a reason Wendy's popping. There's a reason, that all that is. So this is all just scenario analysis, folks. Joel isn't saying there's going to be more cases. We don't know. All we can do is set up scenario analysis. And like I said, a localized case, you're going to see a couple more cases, probably for sure. Localized, probably not bad. Starts to get to a point where they feel like they can't contain it. That would be a major issue. And that's why Chipotle lost so much. So it wasn't on the initial headline that they lost 70% of their value. It was the fact that it went on for a year and they just couldn't get it contained. It was still getting new cases like 6 months later. I was like, why can't they contain this? Figure it out. Finally, they did. But that's the point here is it needs to be contained. If they can get it contained, and to Chat's point, McDonald's, is a huge company, much bigger than Chipotle was back then. So they'll probably get it contained. My betting money is that they will get it contained. But
I also think we collectively, and this will be the last thing on McDonald's. We've talked about it for a few minutes here, but I think we collectively have a much shorter attention span than we did 10 years ago, to the point where, if we don't see this spread much, we don't see any more deaths from the E. coli outbreak. I think 2 months ago or 2 months from now, we're going to be like, hey, remember that E. coli break at McDonald's? And it's just going to be completely off our radar.
Yeah.
People already have their brand image of McDonald's established from when they were a kid. You either like it, you don't like it, whatever it is, whatever your thoughts on our McDonald's, it's established in your head. Chipotle at the time was a new growing brand. So if you had never tried Chipotle and all you knew about it was that people have gotten E. coli there, that's going to be more damaging to the sales than to something like McDonald's. So again, even if this spreads, if this stock keeps going down, regardless of what's going on with the E. coli, because this is a temporary situation, I'd be buying the stock. So Dennis, to your point, if we get more news headlines that there's more of an outbreak, it's spreading, and McDonald's goes down another 5-10%, I'll just start loading in and I'll keep buying on the way down, because again, this is a temporary situation.
Probably.
And McDonald's, over time, the stock has done pretty well. It hasn't been like the sexiest story in the world. But over time, McDonald's, the stock has gone up. And I think they do some things pretty damn well at McDonald's. Again, love it or hate it.
I agree. This is likely a buying opportunity long term. If you got the 10-year time horizon on McDonald's, probably another buying opportunity. I'm
not saying right this second. I'm going to kind of wait and see how things settle out, but especially if it keeps moving lower, because the valuation is going to, will become more attractive on McDonald's, unless, of course, you get to a point where it's hurting sales so bad that the earnings are then lower the next quarter. But all right, we've talked about McDonald's for too long. Making me hungry. I want an Egg McMuffin now after all that.
Yeah, we'll go Dash. Go call DoorDash and get your.
Oh my God! Can you believe people pay so much money?
So much, Joel. So much.
It's just ridiculous.
We talked about this maybe yesterday when you were out the show. Me and
really?
Nate were talking about it. The premiums are ridiculous. It'll take your $20 meal to $40. It's but people are lazy and they want to sit at home and they want to bring.
I think that's not going to
continue. Do it, man.
I'm going to buy grocery stores and short DoorDash. How's that?
All right, we've got our special guest hanging out backstage. I believe a first-time Premarket Prep guest this morning, so it's always exciting bringing someone on for the very first time. So, chat. Be extra civil today, show our first time guest, show them how nice we are here at Benzinga Premarket Prep. We've got Seth Basham from Wedbush Securities. He covers stocks in the retail space. So we're going to be talking some retail stocks with Seth. Without further ado, let's give Seth our very special Premarket Prep welcome and chat about some retail stocks when we get back.
Morning to Seth Basham. He's a managing director, equity research over there at Wedbush Securities. have you heard more about McDonald's stock in the last 10 minutes than you've heard about it in the last 10 years?
Absolutely. Great discussion. I'm not a restaurants analyst.
No, you're not. You're retail hardlines here. And where's our recession? Where's our big recession? When people are spending money, they're losing out to inflation. What happened to the recession?
Yeah, the recession is always in the future, right? We'll see. The soft scenario is the one that's prevailing for the time being, and the stocks are reflecting anticipation of improved spending going forward rather than declines in spending. But interestingly, within the hardlines retail group, we're seeing soft results currently. So even after a weak second quarter, with many companies cutting their guidance for the balance of the year, earnings season for the third quarter is off to a sluggish start, and we're already seeing more signs of risk that numbers seem to come lower once again.
Boy, oh boy, you have such a list to cover here. I don't even know where to start, but I guess I'll start with the bad. And can the bad get worse here? I'm going to bring the chart up of Genuine Parts Company here. And boy, you don't see moves like that very often. Talk about the price action, your fundamental outlook here for GPC.
Yeah, I mean, GPC is one of those nifty 50 dividend pair raiser every year for the last 50 years. This stock does not move very much, even on earnings. Yesterday was the exception. I've been covering the stock for many years. Seeing the stock down 20% was just a crazy outsized move yesterday in the back of their earnings. Now, the surprise was on multiple fronts, and they missed on the top line a little bit, both in their auto parts segment, where they distribute auto parts, as well as in their industrial segment, where they distribute industrial parts. But the earnings miss was outsized because it's a high fixed cost business and they're experiencing a lot of cost pressures. They couldn't get those costs low enough while their sales were falling. So we saw their earnings down 24% or so. And they reduced their outlook for the balance of the year materially, with little visibility to a turn in 2025, and they just got clobbered. So that's certainly a negative read across the rest of the auto parts retail space that we cover, and frankly across much of hardlines, because anything that's discretionary is being deferred right now. People are focused on only their closest and most important needs in the near term.
All right, Seth, another kind of change in lanes here. I want to talk some RH, formerly Restoration Hardware. This stock has been kind of crazy the past couple of years. I mean, it's like one earnings report, this stock just gets absolutely crushed. Oh my God, the stock goes from $400 down to $200, and then they come out with a good earnings report, it comes back up, and then it goes back down. Where are we at right now with RH? Because I think RH can sometimes give us some insights into kind of like the luxury spending habits, how people on the higher end, are they spending money on big ticket items or not? What's your read on RH right now?
This stock has been an outperformer recently, since their second quarter earnings report, as a matter of fact. And we saw an inflection in demand trends for them, which is against what's happening in the industry. We recently met with the management team in California last week, and we came away much more comfortable that strength can continue, and we upgraded our rating on the stock to outperform from neutral. This is a company that can buck the trends in retail right now because they have a couple key products and new store growth drivers. They took their foot off the gas with product development coming out of the pandemic to focus on their supply chain and meeting the demand that was really strong at that point in time. It led to all kinds of problems. They ended up with too much inventory. It was overpriced. They finally reset that. They're coming out with a lot of new product that's hitting appropriately, and they're also ramping their store growth in the US as well as Europe. They have a number of growth vectors, and their margins are going to follow suit. So we see a lot more upside and downside risk to fundamentals. And frankly, I think this growth story can work agnostic of the macro, which is something that a lot of traders and investors are looking for right now.
What about this Carvana story here? Because I see you cover CVNA, and this has got to be one of the biggest turnarounds that I've ever seen in my 25 years of professional trading. This stock went from $376 in 2021 down to like $3. So it looks everybody, even the debt was trading, way down. It looked like everybody thought the writing was on the wall here. This current stock's going down. Nope. Lo and behold, the turnaround story has come, and it is real, and the stock is now making new 52-week highs once again, back to $197. Wow. Is this story real?
This is the most crowded long in my space into earnings for sure. So they definitely have gotten their act together. They've made a ton of improvements with their operations, and they're really the leaders when it comes to online used car retail, as a couple of their competitors have gone out of business over the last year, including Vroom and Shift. So they're left standing. They've gained market share. They fixed their operations. They've also expanded their credit box and moved to lower priced vehicles. Those two things, I don't think people fully appreciate how much they've helped sales over the course of the last year. They're going to start to annualize some of those benefits here moving into the fourth quarter. And they also have some potential issues in terms of profitability associated with the loans that they sell after they make those to retail buyers. So we see a couple speed bumps ahead here. And given such a high bar for the third quarter earnings and outlook for the balance of the year, we're not pressing long into this print. We take the other side of that trade.
All right, Seth, I'm going to put you on the spot here, and I'm going to give you a couple stocks that are, in similar spaces, kind of competitors, and you tell me which one you would rather own, okay?
Okay.
All right, we'll start with Academy Sports, ticker ASO, versus Dick's Sporting Goods.
So our ratings are based on a 12-month time frame, and on that basis, we prefer Academy Sports over Dick's.
Okay, I wouldn't have guessed that. Why is that?
So Academy's valuation is extremely attractive. It's a growth story that's not being valued appropriately. They could potentially add 50% to their store base. And once they get comparable store sales back to positive and the unit economics of those new stores show some improvement, they're going to get valued appropriately. In the near term, they're in the doghouse because they serve more of a low income customer than does Dick's. They don't have access to as many marquee brands. And so there's a very big divergence between the two companies when it comes to comparable store sales. But as we move into 2025, we expect some of those pressures to dissipate and the valuation gap to narrow.
I've only been to a couple Academy Sports. I've been to some Dick's Sporting Goods. It seems like Academy is more geared toward like outdoors, like kind of like the hunting, or like outdoor adventure. Like, do you see any big differentiators between the two companies, or are they just both to you like big, sports retail stores?
Academy does have more exposure to the outdoors category and to hard lines generally relative to Dick's, which has more exposure to footwear and apparel. The drivers of the industry over the last year and a half have been certainly in footwear and apparel. So that's been something that's weighed on Academy. The other big thing that I mentioned before is their customer-based exposure. And there's some regional exposure as well with Academy Sports, mostly in Texas and the Southeast. So those are three differentiators that's leading to underperformance for them. And we expect those to start to improve in 2025. And the last one is, as I mentioned before, is they don't have key hot brands like Hoka and On running shoes, for example. And we hope that they'll get those in 25 as well.
Real quick, I want to back up for a second because, you're coming on as our hardline retail expert from Wedbush. What is hardline retail versus, is there a soft retail?
Yeah, and soft lines would be apparel and footwear generally. So okay. Hard lines retail is hard goods, more discretionary, bigger ticket purchases.
Got it. All right, going back to these comparisons where I'm going to give you two stocks. You got to pick one. Home Depot versus Lowe's.
Yeah, we recommend Home Depot over Lowe's. That's been the right trade this year. Home Depot has been where big money flows have gone. Where they want exposure to housing and the derivatives of housing in retail. So valuations at an extreme, but people have moved in for that reason, as well as the fact that they think their earnings are de-risked in the back half of this year as the company reduced its outlook with this last quarterly earnings report. I largely agree. I think that the third quarter results should be about in line with consensus expectations. And I think that they're better positioned than Lowe's here because of their stronger mix of sales in the professional or commercial side of the industry, which is almost half their business at this point. And that's where we're seeing relative strength versus DIY.
Got it. All right. The last one I'll throw out to you is O'Reilly versus Advanced Auto Parts.
Now, this is an interesting one. So we recently increased our rating on Advanced to outperform from neutral. We rate O'Reilly neutral. O'Reilly prints tonight. There's modest downside risk to their print. Advanced prints in mid-November, and we see modest downside risk to their print as well. But the reason why we like Advanced, besides valuation, which is extremely cheap, is we think that there's a way that they can survive and eventually thrive. They have been struggling for a couple of years, and they recently changed management. The initiatives are starting to take hold. And at the same time, there's a special situation here with them selling off one of their core assets in WorldPack, and their RemainCo business, we think is going to be better than people realize when they disclose the details of it. And the cash they get from that sale will help pay down debt and reinvest back in the core business. So we don't expect a debt downgrade, which is part of the bear thesis. And we expect their vendor financing program to remain intact and be an important contributor to their success in the future.
Seth, what did they do wrong? I just want to stay on this story here for a second because I don't follow the fundamentals. I just trade these things as pairs. And I tell you, like O'Reilly, for years, stock's just been straight up, and AutoZone stock kind of just straight up. And then you have Advanced Auto Parts that looks nothing like the others in the last 2 years, just straight down for 2 years. What have they done wrong compared to the other two? And are they just different? Like, I just see all these things as auto parts. I didn't know there's much difference, but the stock market obviously thinks there's a major difference here. What have they done wrong?
Yeah, there are a couple structural differences between the two companies or three companies. Advanced doesn't have as good a distribution network. They've had some challenges with turnover in their field sales, and their IT has not been quite as good either. So as I mentioned before, there's been new leadership in the company for about a year, and they've started to invest in distribution. They've started to invest in field sales. They've invested in price of their product as well to make it a little bit more competitive, especially for that commercial customer. And some of those things are helping to stabilize their market share declines, and we think they'll be able to maintain market share in 2025.
All right, Tom. Wow. Great interview here with Seth. Just a couple things. I just want to go back to this Carvana here. And I don't put many stars like this very often. I don't know what people are trading this. I don't know what the print's going to be. But look at that consolidation and look at this 187 area. That's all I could tell you, folks, is that this thing's good to go north. But is it 187? What's this like? Yeah, 187. That's how many stars you get for that. Okay, we're going to do one more, and I don't know if you want to sleep on this one or not, but you got two mattress companies here, Sleep Number and Tempur Sealy International. Either one of those interest you or both?
We're neutral rate on both of them. We reduced our rating on Tempur Sealy, the industry leader, about a month and a half ago. On two things, primarily their prospects to complete the acquisition of Mattress Firm, which the FTC is contesting right now. We don't think they're likely to do that, lower than 50% probability. Huge accretion if they're able to get that deal done, but they're owning too much market share, and they've made those statements in documents that the FTC has uncovered. So we think those hot docs prevent the deal from going through. And the second thing is that Tempur has been a key market share gainer over the last couple of years, primarily at the expense of the second largest player in the space, Serta Simmons brands. We think those market share gains are narrowing materially based on recent data points and some of the new product and new management at Serta Simmons. So the story's not as attractive from that standpoint. Sleep Number, smaller company, more vertically integrated. We're not big fans of that turnaround at this point in time.
All right. Great interview. Seth Basham. He's following retail headlines over there at Wedbush Securities. Getting a lot of stocks in there, Seth. We really appreciate you coming on, and we're going to get you back on again real soon. Seth Basham, Wedbush Securities.
Take care.
All righty, guys. That was Seth from Wedbush. Great to go through some of those retail stocks there. All right, we've got a few minutes left here. Some stocks we have not talked about yet, or at least we've mentioned, but we haven't gone completely into it. Let's go to ENPH Energy, kind of our disaster of the day.
Disaster of the year, disaster of the solar sector just continues to go down in shambles there. Took a lot of guts yesterday for Citigroup to upgrade First Solar to buy. Immediately gives it all back and back down to the lows. So analysts definitely fighting the trend there and punished for it too.
Wait,
Because
I'm seeing Citigroup. I'm seeing Citigroup maintains neutral on ENPH Energy, lowers price target to $99.
Yeah, tangent here. So I said First Solar with the upgrade to First Solar yesterday.
Oh,
I cover them all
sorry.
together. Yeah, I remember we covered the First Solar upgrade there yesterday and took a lot of guts, is what I was saying, to be upgrading into this ridiculous downtrend that we've had in solar. And First Solar is right back down like the next day. So that just shows you how much selling pressure is in this sector. Obviously, ENPH putting pressure on it today too. ENPH has just been a complete disaster. I mean, ENPH and SEDG, are just two stocks that just continue to go death by 1,000 cuts. SEDG was $345 a share at $16 here now, and ENPH at its highs was $339 and it's 77. I mean, these stocks just continue to underperform and continue to get hit.
Yeah, or look at Sunrun's chart on like a weekly or that's ticker run.
So
yeah,
it's just been such a disaster.
It's just there's been no bright spots. I mean, for a while, ENPH Energy was kind of best of breed, and it was up at $340, making all-time highs. So ENPH reported yesterday after the close. Let me get those numbers real quick. So EPS came in at 65 cents. That missed the estimate by about 12 cents there. Revenue of $380 million, missed by $13 million. So you missed on EPS, you missed on sales. The downbeat, you had guidance that was underwhelming as well. So between the downbeat guidance, double missed, stock is trading down more than 15% this morning, down $15.23, about 16.5%. So ENPH Energy, ticker ENPH, just getting absolutely clobbered this morning on that report. Went from around 90, we actually spiked up off the initial report to $93 and then came all the way down to, what are we at right now? $77. So big move to the downside in ENPH.
Boy, you just have a relentless step down seller here. You're down $15 and someone is just puking this out. They're just like, we're done. So I don't want to be a contrarian. I don't want to be a hero. I will just say back in November of 2023, almost a year ago, if you were looking to buy this at $75.99, well, you may get your opportunity today. So it was just
all the way back there.
It's just a weekly low. So if you want to keep an eye on it, if you own this stock and you're looking for monthly lows, you probably want to turn this show off right now, because the next pair of monthly lows do not come in. Oh, wait, no, you got a monthly
73.
low. Oh, I'm not. Yeah, 73.49. So I'd be a natural buyer from 73 to 76. But if I was short, if I was trying along, I'd like to see, what happens. But right now, step down seller, this First Solar is getting hit too. And I just think I have to cut out here in a minute. But I mean, what's the TLT telling us here, Dennis?
Well, we've talked about this for a long time. I mean, we talking about this. I had a big rant on it yesterday, Joel. It's telling us that long-term rates are going higher. Again, to Jim Tassoni's point, this is maybe the normalization of the yield curve. We're short end. Obviously, we've been in this inverted now where, we're coming back and it's getting into more normalized markets where the long end yield is typically higher than the short end yield. And that's what you're getting, some normalization there. But long-term rates going higher is not good for any of these companies. And that is a big reason why solar continues to get hit. Also, to what we were saying, and you had said to me too, Joel, is Trump. I mean, Trump moving up in the polls is not good for solar stocks, because Trump is obviously not clean energy person here. So I think if Harris wins, if Harris comes back and ends up winning, solar's going to get a pop on that, but definitely not Trump stocks.
All right. Well, Joel, I know you got to run.
Yeah,
So
yeah. I just want to tell you guys, we got a really good guest coming on tomorrow. Boy, we are on a roll. We're going to bring on Craig Johnson. What a
Nice.
time to bring on Craig Johnson here. The perpetual bull on Wall Street. He was telling you to load up last time we were on. I don't remember where his target was here, but I'll be interesting to hear what he has to say. I know Citigroup is showing, we didn't get to discuss this, but Citigroup showing in the towel on the market. Goldman Sachs is, well, one part of the company is talking real bearish here. So we'll see where Craig is at with his year-end targets. And I got to hop, gentlemen. I will let you finish up the rest of the show. And Triple D, I will check in with you later on, folks. Everyone have a good day out there.
Show must go on, so stay with us here. Just because Joel leaves doesn't mean the show is over. So we're continuing on here. One, just getting away from the earnings for a second, what we haven't mentioned is the Save Frontier deal back potentially on the table here. We know it's Save JetBlue. Well, now all of a sudden Frontier is getting back involved here. And somebody's trying to save. And I do believe if a deal comes out of this, that this administration is going to be saying, hey, we don't want to lose Spirit Air. So maybe they're starting to realize that this is a merger out of necessity and not actually to screw the customers. So I think, there's going to maybe be a deal here to be had. I hope there's a deal because we don't want to lose Spirit. But I mean, without a deal, the stock's in a whole lot of trouble. They were talking and rumored about bankruptcy, just a few weeks ago. But now looks like ULCC Frontier Group might come to be the savior here.
yeah, and I mean, to your point, Dennis, I mean, when the antitrust department and whatnot are looking at this, I mean, what's worse for the consumer? To let one of the only kind of cheaper budget airlines go completely out of business, or have them merge into one bigger, budget-friendly, cheaper airline? And I think for us, we want that choice. If I want the choice to be able to fly Spirit, and I mean, if anyone in the chat has flown Spirit or Frontier before, they're pretty similar. Like, what you're getting. It's not as nice as Delta. It's not as nice as like a United or even a Southwest flight.
Yes.
You got to pay extra for bags. You got to pay for everything with Spirit and JetBlue. But if you're just going to, somewhere for a weekend and you don't need to bring bags and you don't need to bring that much stuff, it's nice to have that option to buy an $150 round trip flight, whatever it is. Yeah. So I think, again, if there is a deal on the table, that maybe they reconsider the scrutiny that this deal has received in the past. And you're seeing Save stock up again, 30% this morning, up 63 cents. So getting some life here.
At least there's life. So, okay.
There's signs of life, at least.
Signs of life. So I think they need a deal. I think the government will be on their side this time. Other stocks are reporting this morning. We're getting a little pop in AT&T. It's a widely followed stock. Verizon had a really ugly day yesterday. Really didn't bounce much. It brought down T-Mobile as well. AT&T was down too, but bounced towards the end of the day. Well, what Verizon has done is, in fact, lower the bar for AT&T. And so AT&T comes out this morning, and their earnings, they beat by 3 cents. They offered okay guidance, and the stock's popping, probably because Verizon set the bar lower. With that being said, $22, it's thick up here. It does trade like a bond, so it's been going, like it's interesting. It's held up better considering that the TLT has really been whacked. Getting the 5% dividend, it's there, but there's a lot of businesses in here that just aren't doing great.
Another stock that we got this morning, Coca-Cola, ticker KO, reported this morning. Boring stock. It's not going to move too much. EPS came in slightly above the estimate. Sales came in at 11.9, beat the $11.59 billion estimate. Stock is trading down this morning, 2.3%, despite the double beat. Let's see why that is. Let's see. I don't know.
It's because everything's getting whacked on earnings no matter what. That's what we're into here. It seems like the majority of stocks just get hit on earnings even when they're okay. Coke's had a pretty good run. I mean, Coke has been a really good performer this year. Stock was down in October, $51 to $68. To your point, that's a huge move for Coke because this is a dividend stock, sits there, cash cow, doesn't move much, not a lot of growth, but just, slow and steady wins the race. And, so you're getting a pullback. These dips often get bought. But again, this is not the market to be just coming and blindly buying dips in, because some of these stocks, they start to get a little bit worse. So it's a tough market. It's been a tough market for stocks that are reporting. And that, bringing us to Tesla, That scares me to a certain extent tonight. I have hedged part of the position. I don't know if I'm going to hedge all the position or not. I've hedged part of it, but I mean, Tesla's just sitting here for now, 1, 2, 3, 4, 5, 6, 7, 8 days waiting for this report. It's waiting to get more information. The expected move on Tesla, let's go grab that. I think it's about 12 or 13 bucks when I looked last. Let's look again here, though, just to see if the options have priced in. I checked it like a week ago, but I think if we check it now, the expected move is going to be maybe a little bit different. So how we do that again is we go to the calls and the puts on the similar strike. Closest expiration is October 25th. 217.5 on both sides. So it's a little bit more than that. It's about $8 and $7.50. What's that math? About 15 or 16 bucks. So there's a little bit of an expected move here, $15 or $16. That would bring us down to 200 if they disappoint. It'd bring us up to the 235 range if they beat. I don't know what to say. Does GM raise the bar a little bit here because GM reported really good earnings, or does Tesla just its own animal and doesn't even care? What are your thoughts on Tesla going in, AB? Because I get my thoughts on Tesla all the time.
I think it is its own animal. I don't know if you can compare it to GM's, because I'm not bullish on what Tesla's numbers will be just from car sales, but if they say something about like, oh, the energy business went up another 80% last quarter, whatever it is, then maybe the stock gets bought up. I would lean toward more bearish into this report, just because I think we hear all the time about Tesla's not a car company. Well, right now most of Tesla's revenue still comes from cars.
Yes.
And I don't think that business has been the strongest, and so I wouldn't be surprised to see them kind of giving some lacking earnings in terms of the car sales. But again, could they say something in some of the different industries that are in? Again, the energy storage one is the most interesting to me right this second. Obviously, you have the robo-taxi and the humanoids. I think after the event a couple weeks ago, we can all agree that those are still years down the
Ways
road.
off.
A ways off. So right now you're basically looking at car sales and this growing energy component. And the growing energy component, I'm very bullish on. I think Tesla has better infrastructure for that. They're already picking up some steam. You're seeing them make a lot more money year over year in that space. The car sales, again, I would lean toward bearish on that. So I don't know how the stock's going to react. If you gun to my head, if I had to pick a certain side, I would lean toward bearish in this report. But that's just because, like you said, Dennis, basically every company, even on good reports, half of them are down.
Yeah.
So if you have the companies that give bad reports and all of those are going down, and then half of the companies that give good reports are going down, then you're
winning on the short side on the reports.
Yeah.
There is some exceptions, GM being an exception. There has been some stocks, Philip Morris. There is some exceptions to the rule. Not everything's going to go down, but to your point, this has been a really tough earnings like last week. In the last few days especially, it's just been like they're selling everything on, and it's selling stocks hard. Like the GPC was like a jaw dropper. But even Lockheed Martin, I mean, here's a stock that's probably got cushion. I thought you'd find buyers in the 595 to 600 area. Those were not to be had at all. That stock just continued to go straight down. And now it's an ugly, ugly candle. And it's like, okay, well, it needs to recover from that. That candle is just an outsized candle. Like you got, continued tensions in the Middle East, but there's no cushion there either. So, I mean, it's a tough earnings season to be betting on stocks going up off earnings. It just hasn't been that many good stories here. So I probably lean with you. That's why I've hedged part of the Tesla. Is like, I think if it pops, it's probably short-lived. If it drops, it probably continues down for a little bit there. And again, talking against my books, I do have a big position in Tesla. But I mean, from the short-term trading perspective here, the robo-taxi event really hurt because we saw the timelines and it's not close. I mean, I think all that stuff's going to be really awesome. I think when they solve FSD, it's going to be a difference maker. But all this stuff is at least a year away and probably 2 to 3 years away. And our investors are very impatient, so they're going to wait that long. That's why I've been, selling some calls against my Tesla position and bringing in premium, because I feel like the timing of this, to be all in on Tesla isn't yet. I still want to have a core position that I'm leaving open because I think 5 years down the road, I think Tesla looks like a completely different company. But there's a lot of stuff. It's going to be a wild ride. It's going to be ups and downs. And you know what? You're allowed to trade within positions, and you're allowed to bring in premium. If you're willing to hold stocks, bring in some premium when you think the stock's going down. I mean, I love owning stocks and trading stocks.
Are you selling calls?
Yeah, I sold the 220s. So
Okay.
I've already have on the position. I sold
So
it
you
ahead
sold
of time.
220s. Those are going for
$11, but they're down to
Okay.
like 6 because I sold them a little while ago.
And
So they're not
Tesla
worth
stock
as
has
much.
gone down since then. Yeah. So then if it hits that, you sell 100 shares at 220, you make money on that sale. You also bring in the premium, or the stock doesn't go up, and then you just bring in that $11 of premium.
Yeah,
Right?
like what I'm banking is even if it goes up, I think it comes back down eventually and gives me a second shot. If it goes down, I'm hedged for it was a lot. I think it was 10.50. I sold it for, but that was
worst case scenario is if this rips up to like 250,
and
you
I don't
make
get that well, you get called away, but the worst case scenario is the stock get absolutely crushed. Like let's just say, hypothetically, they really disappoint, stock goes down 30. Well, I'm only insulated for 10, so then I'm eating 20 on the stocks. That's the worst case scenario.
If that's what you were worried about, then the best way to hedge it would just be buying out of the money puts, right?
Yeah, but I like to bring in, so I like to
bring in
money
the for sure premium from the thing. Someone in the chat asked about solar for Tesla. I think Tesla completely stopped reporting their like solar revenue. It was so small. I mean, I don't think anything ever really materialized with that
That's
Solar City.
Yeah, I mean, you could Google quickly. There is some solar revenue in there, but to AB's point, right now the majority of the revenue comes from car sales. Right now it comes from car sales, and right now we've seen, like big ticket discretionary stuff is not doing that great. General Motors maybe being the exception. They figured out a way, but I mean, to Winnebago, we didn't talk about that report here today. It's slammed. To Polaris, it's slammed. Tesla is still a luxury vehicle to a certain extent. Yes, they're coming out with cheaper cars, and yes, eventually they're going to be there. But a lot of these cars are expensive. I mean, they're a Cybertruck. I mean, like $150,000 or 130. Like in Canada, it's $150,000. So like a 120. I mean, these things are expensive. So, I mean, are we in that environment? This environment hasn't been that great for Tesla, and that's why the stock suffered. Tesla's gone nowhere. Like we can talk about Tesla, and say how great of a stock this has been. It's been pretty good in the last few, 6 months, and I'm averaged in from 180, but it's been a terrible stock over the course of the last 4 years. I mean, it's gone nowhere. A big reason for that is interest rates. Interest rates went from nothing to something, and that's hurt their sales too. So there's Tesla itself is still a potential turnaround story. This isn't a stock that's fired on all cylinders, even though it's firing on no cylinders. I mean, it's, still in this range, and maybe this range bound persists for a while here because the stuff that's coming is still a ways out.
All right, guys. Well, that will be a wrap on our show today. We went a couple minutes extra. Shout out to Seth Basham, first-time guest from Wedbush. We're going to have a lot to talk about tomorrow, too. Of course, Tesla's earnings report coming after the close today. We will discuss it. We will give our reactions tomorrow morning. With that, thank you to everyone who tuned in. We do have live trading starting up right after this, so stay tuned for that. We will see you guys tomorrow morning.